welcome back everybody to part 8. So in part 7 we ended talking about the Q on Q cash flow key drivers. And here's the summary again, and now we dive into the detail, and we start with payables. So what is payables? Payables are things you haven't paid yet, and a big driver is, I mean, first of all, this is often kind of not correctly reported in the mainstream media for various reasons, but payables doesn't always mean you're squeezing your suppliers. You pay your suppliers super late. There are also other reasons. That's why you have to look into the definition of payables. For example, if we look at Tesla in 3Q, payables added a huge positive. So payables increased, or sorry, created a positive effect, is the correct of putting it, of 2.3 billion. So in the cash flow statement, you would see on the payables there was a positive 2.3 billion. In the second quarter, there was almost a 1 billion negative, and the change from 1 billion negative to positive 2.3 billion. This is the sort of the Q on Q sequential driver of 3.3 billion. And this is the number that you see right here. So this can be something a little bit hard to understand. So this is not the absolute amount here. So this is the change. So the change analysis to see what was Q on Q really driving. So we had from a negative effect in 2Q, we had a very positive effect in 3Q. So this was a significant change of positive 3.3 billion. And in the fourth quarter, I expect a kind of a reversal of this effect. I still expect a slight positive 320 million in payables. And therefore, sequentially, in terms of the change is here a negative 1.9 billion. And if you jump back to this slide, this is the number that you see here. So I marked them specifically so it's easier for you to connect these slides, how this works. This is slightly more advanced type of analysis, so I want to spend a bit more time on this, because this really allows you to see what's going on. Otherwise, you simply can't. So this tells you, this change analysis tells you, okay, what was changing quarter on quarter, what are the big drivers, what was not much needle mover, and then when you dive into the items, you see directly in the income statement how has the reported amount changed. And I forecast significant drop in the cash flow statement, and now we talk about why I think this is the case. But before we do so, we look at the days of accounts payable outstanding, or DOS for short. This is an important metric because it gives a rough estimate of how long it takes Tesla to pay so suppliers in other kinds of sort of basically how long does it take Tesla to pay bills. This is sort of the high level. It's not a very good definition, but it's generally how it's looked at. And you can see in the third quarter, this was 63 days. This is quite short for automotive standards. There are some automakers that have even below 50. So this is quite good. So if I was a supplier of Tesla and I saw this analysis, I would feel quite good about Tesla, because there are companies that have over 100, and in China it's not uncommon to see even significantly more than 100. And so my forecast at 62 is actually basically forecasting a slight acceleration in days, and we get in a second to why I think this might be the case. And over here I just show you how this is calculated. So you simply take the accounts payable, and it's important that you look at the average balance sheet balance. So you simply take the beginning and of period, end of period balance, and you take the average, and then you divide for that quarter by the cost of revenue. So I mark this here, which item you need in the income statement, and here which item you need in the balance sheet. Then you multiply this by the days in a quarter, and quarters have different lengths in terms of days, and you should adjust for that to make the metric slightly more precise, and then this gives you the DPO. Here I used a slightly different abbreviation because there's no globally consistent standard, but I should have used, to be fair, the consistency here. But this is also called days payable outstanding. So this is the thing that sometimes people who start in financial analysis, that can be difficult. There's a lot of jargon. There's a lot of terms that that have different that they're the same concepts that have different terms, or they have significant overlap. So just keep that in mind. But DPO and the US, it's basically the same thing. And now we take a look at the balance sheet. So the cash flow statement and the balance sheet, they are very closely linked. And in Tesla's case, what's important to know is that accounts payables in Tesla's case, um, what they show in the cash flow statement and that we just looked at, and which create a significant benefit in 3Q, Tesla defines as the sum of the, what I abbreviate here as AP and ALO. So the AP is the accounts payable, which you would expect, but it also includes a very large amount of accrued liabilities and other. So keep that in mind. So when you have to see this huge benefit in the cash flow statement, you always have to check, okay, what exactly was driving this? Because this is often misreported that, oh, for example, there's a huge benefit and accounts payable go up, then people often misreport, oh, Tesla is trying to boost their cash flow numbers by paying suppliers slower. This is typically BS because of this situation. You have these two main items, and you can see over time the ALO has grown quite a bit. So what is it? So down here I left a little note that shows you sort of the key items, and you can see it comprises accrued purchases. This is things, so goods or services that Tesla received, but for which it was not yet invoiced. So this is not Tesla's fault. So Tesla received goods and services, but in their accounting department, Tesla hasn't received an invoice. This is I'm not going to get into sort of the purchase dynamics in big corporates, but this is quite common, and that you see such balances. So this is not something we could have an hour-long discussion just about this item, but I keep it short. So this is not, this is just normal stuff. So to see this grow as the business scales is completely normal. And then very importantly, Tesla still has a very large auto business, obviously, and then also the energy storage business, and both of these um, um, products, auto products and energy storage, they come with warranty. And so there is constantly a very large warranty accrual. Accrual just means you put money aside in case you need to pay, you need to cover repairs, etc. in the future. This is just for prudency. And the current portion of this significant amount of money, the current portion is something that it's typically defined as something that's due within a year, and this current portion, that is also reflected. And if you think about Tesla's significantly scaling fleet that we looked at earlier, significantly scaling energies business, there's a significant growth, obviously, of the warranty reserve. And of course, as this warranty reserve grows, each quarter, some growing piece becomes current, and this also drives significantly this item, and this is basically a permanent cash flow positive, because this is a liability that's growing, and a growing liability is in most cases a cash flow positive. And this is why the payables definition in Tesla's cash flow statement has an upward bias. Even if Tesla keeps paying their suppliers completely constant, payables still goes up. So then when we analyze the situation here, so I forecast there's about a $500 million increase, and then you look at, okay, so this is driven by the ALO, as we just discussed, primarily plus 700 million, and I actually expect that more typically more the accounts payable, it's sort of a more intuitive way that people think about it, the payments, outstanding payments to suppliers. I actually forecast it to go down, and the primary reason is sort of an observation. You saw a meaningful increase in the third quarter. Tesla has significant cash flow in the third quarter, and keep in mind the first quarter tends to be uh, significantly weaker in terms of order sales, so it tends to be a weaker cash flow quarter. So this is upcoming. So for Tesla, in terms of managing their suppliers properly, I would take the opportunity. If I was the CFO, I would take the opportunity to make sure my accounts payable balance is not taking up too much. So I would rather try to reduce it in 4Q because I can more easily put it within my bigger cash flow. And then I have more leeway in the first quarter, which tends to look weaker on a free cash flow basis, to increase it again. This will be just um, sort of typical sort of CFO kind of thinking. So this is kind of the big picture on payables, and then but I don't want to leave it at that. I also actually want to drill a little bit deeper into the ALO. So here's the breakdown of the balance sheet balance of this item, and I'm not forecasting it, just to give you an idea why you would always expect here this light blue to grow. And here are the components. So as we discussed earlier, there are accrued purchases, so things Tesla has not yet been invoiced. You can see actually this came down quite meaningfully over the last couple of quarters. Then the accrued warranty reserve that we discussed, and this you can see grows constantly for the reasons that I just laid out. Then you have payroll and related cost. So basically, um, so something Tesla owes but has not yet paid, and I'm not going to get into detail that this normal part of business, or business as usual as it's called, or BAU, and this also keeps growing as Tesla grows its global scale. Then taxes. Taxes depend significantly on profitability, but you can see that here in um, here we had some kind of a change. I'm not going to get into detail. This has to do with the tax accounting change, sorry, the tax reporting change Tesla implemented end of last year. Then we have customer deposits. And so customer deposit, you might think, oh, Tesla is not really pre-selling any products right now. Cybertruck deposits have all been exhausted, etc. And I left here a little note. So this customer deposit line is not just the amount you might pay up front. For example, the Roadster, there will be some amount of the Roadster in this amount, but it doesn't explain the 1 billion. So the primary driver of this item is refundable items. Um, there, for example, you buy a Tesla, you pay the vehicle in full up front, but you have maybe you have a return policy, so there's an ongoing amount of money Tesla sets aside for people potentially returning the vehicle. So this is also something you'd expect to grow. So then we have operating lease liabilities that is in relation with the leasing business of Tesla. This will also likely increase. Again, I haven't forecasted this explicitly in this case because for various detailed reasons can't get into. This video will become way too long. And then we look at the last interesting item in 3Q, which is other current liabilities. Tesla does not provide any information around this item, but you can see that there has been a very significant increase. The increase already started in 2Q, interestingly, and then significantly increased in September. My best guess is, and I put this over here in the comments, my best guess is, so there are two drivers and one driver I state here. My best guess is this has to do with the tariffs in Europe. The tariffs in Europe, they're effective from the 4th of July. They were signed into law, I think, beginning of November, but they were sort of retroactively activated, and the effective date was 4th of July. So it would be the third quarter. And I think, because I can't find or if I was the CFO, I would put the accrued tariff amount in this item. This would be one way of doing it. There would be another way you could do it, but this, again, is just a guess. I can be completely off here because the other item it could be, because it strongly correlates with the exceptional performance of the energy business. This could also be in relation to that there is some accrued liability um, uh, that has to do with the scaling of the energy business. Um, and yeah. Anyways, so I can only speculate about this. So maybe in upcoming quarters we get more information, or with the full year reporting we might get some more color on this item, because the bigger the item grows, the more, not pressure, but from best practice principles, Tesla's accountants will probably want to include a note in their SEC filings, and once it happens, I will report back on it. So now we discussed in detail accounts payables, the key items, so typical accounts payables, and then the other component Tesla includes accrued liabilities and other, which you have now sort of seen in detail. And now we move on to the second very big operating cash flow driver, which is inventory. So, but before we move on, I stop the video here because this is already quite long. So see you in the next part. Bye.